Citigroup out with fourth quarter results. I know Wilfred Frost. I mean, when it rains, it pours. Wilf, control yourself.
Well, I know, because it's Citigroup and Wells Fargo.
You get so excited when it happens on one day.
I know. Very exciting. Three and PNC's coming out today as well. Anyway, revenue for Citigroup, similar themes in Citi to JP Morgan's, though revenue not quite ahead. 16.5 billion forecast, 16.7. EPS well ahead, 208 forecast, 134. Why so far ahead? Again, the same factor. Reserve releases instead of builds, credit benefits as opposed to credit cost. The reserve release, 1.5 billion. Coming in. Now that in context, though, we've changed direction, which is great, but only a small step. 1.5 billion released versus about 10 or 11 billion by Citi built up the prior 3 quarters, releasing a little bit in the fourth quarter. Put another way, credit costs coming in basically 0 for the quarter for Citi. That's compared to 2.4 billion the prior quarter, or 17.5 billion for the full 3 quarters beforehand in 2020. The cost this quarter about 0. Similar themes as well for them in the fee area. The fee area better than the interest earning income. Decent beat on investment banking, 1.3 billion, up 5% year over year. Fixed income trading up 7% at 3 billion, and equities up 50% year over year at 810 million. Now, if we look at Wells Fargo, not quite the same themes really coming through. Revenue 17.9 billion. That's a tad behind the expectation of 18.1. EPS is a beat, but only a small beat. 64 cents per share versus a forecast of 59. You do have a reserve release, a net benefit, in provisions coming in at 179 million. The forecast was for a loss of 900 million, but it's not really at the same scale of the others. But more importantly, you're seeing some costs come in higher than expected. The efficiency ratio, 83%. It was expected to drop back down to about 76 or 77%, and that's partly because non-interest expense came in about $1 billion ahead of expected, 14.8 billion compared to forecast for about 13.8 billion. So a couple more problems under the surface, it seems, there for Wells Fargo. The stock's down 2.7. It has ripped higher, Wells Fargo, from the last 2 months, having underperformed significantly throughout the earlier part of the year. Their new CFO will be joining us on Closing Bell for his first television interview.
Shepard Smith here. Thanks for watching CNBC on YouTube.